All right, we are live. Great day, everybody. Welcome to another incredible episode of Seeds of Abundance, where we get to talk to remarkable entrepreneurs, visionaries, people with big ideas, and really discuss, the things that drive them. As always, my good friend and partner, Mr. Jim Gale, coming at me from Florida.
Hey, buddy. Yeah, I'm very excited about this show. Based on what we just talked about, there's going to be a lot of good stuff coming in here. The weather has turned here from summer in Florida, 97 and 99% humidity, to like 88 and I don't know, a lot less humidity. So it feels so freaking good.
Well, as you can tell, I got my sweater on. It's cooling down here in Canada. And our guest on the show today is also a fellow Canadian. He's in a colder market than me. Mr. Jayson Lowe, good to see you, my friend. Been a long time, man. How are you?
I'm doing outstanding. It's great to be with you. And I lived and worked in Riverview, Florida for a number of years. And so I can relate to the humidity.
Yeah. Yeah, right? Oh, my gosh. If you just walk to your car and you're damp.
Yeah.
And if you walk around the house 3 times, you're soaked.
Oh, yeah. Yeah. Brings back memories.
Yeah.
Well, hey, Jayson, for everybody watching today, why don't you first just give everybody a little bit of a background about you and where they can find you?
Oh, sure. Well, I guess I would begin with just sharing that, our company, our group of companies, I'm the chairman of our Lowe family group of businesses. So we have 12, soon to be 13 companies in our family group. And we're in a variety of businesses that I know. I only operate in areas of business that I know and that I'm familiar with. And so we're in the life insurance space in both Canada and the United States. We operate as Ascendant Financial, and that's a wonderful business specializing in the implementation of the process of becoming your own banker, the infinite banking concept. We're in e-commerce. We have a thriving e-commerce business, again, both sides of the border. That business in Canada is named Canada Prep and Ship. And in the United States, it's named Low Buys. And we sell a variety of general merchandise on Amazon's FBA platform. And we do a direct to consumer business as well. And we're in private lending, we're in real estate. And again, just a number of areas of business that I'm familiar with and that I know I can create value in. And so that's what keeps me busy. But people can reach me on the Facebooks, the YouTubes, the Instagrammies, the Tweeters, all that stuff. If you just look up Jayson Lowe, you'll find me there somewhere. We post to social media several hundred times a week. And so once you connect with me, I'm literally going to follow you around everywhere because of the pixeling or whatever they call it. But yeah.
So this infinite banking concept is something I had heard about prior to knowing that you were in it, although you and I have known each other for, we got to be approaching at least 12 years ish.
Oh, longer than that.
Maybe even longer than that.
Yeah.
Maybe it's 14.
Yeah.
And I don't think you were too deep into the infinite banking concept at that point.
Oh, I sure was.
You were. Okay.
Oh, yeah.
So I did not know that.
Yep.
But I had come across it. I had got that book, Become Your Own Banker, the Nelson Nash. Yeah, that's the one. And I had that book and was fascinated by it back then and just never took the action on it. But you have. You did it in a big way. Big way. So I'd love for you to really start there with, what is the infinite banking concept? What can it do for people? And why are you building a phenomenal business around helping others learn about it?
Well, the whole essence of the concept is to control how you finance all the things that you need throughout the course of your lifetime. If you think of all the money, that you've spent up to this point in your lifetime on anything that you would have paid cash for, leased, or financed, you can't write me a check for that amount of money right now because it's gone. You've transacted in exchange for all those things that you've purchased up to this point. So you did all the work and someone else got all your money. And that's a problem because you can't earn interest on it again. You can't spend it again. You can't save it again. It's a permanent transfer of money away from you and every generation that comes after you. So you permanently forego the use, the liquidity, the opportunity to earn interest on that capital. And when you think of how most people, if I'm addressing 99% of the North American public, when you're buying property, business equipment, cars, you're paying for weddings, you're paying for technology in your business, you're anything that you can envision, chances are you're going to be dealing with someone else's bank at some point. In fact, it's every single day. And so if you recognize the truth that your money must reside somewhere and that at present, all of your money is flowing through the books of someone else's bank, and then you understand that the solution to that problem is the process of becoming your own banker, it opens your eyes to a whole new financial world. And the easiest way to begin relating to it is to, again, just ask yourself that question. If you were to add up all the money you've spent up to this point in your life, do it for your whole family. If you can't write me a check for that amount of money right now, then you're not practicing this process. You're continuing to abdicate the responsibility of banking in your life and your family's life, but more importantly, the opportunity that controlling it represents.
That's amazing.
Isn't that good?
It's amazing. And I've heard just tidbits about this. So I'm super excited to learn more. How does this work?
It's ridiculously simple. You know, if you were to just browse around social media, you'll find a lot of information about the infinite banking concept, a lot of which is sensationalized. You know, this is the black box of the super wealthy. These are the secrets the banks don't want you to know. This is a way to create wealth that's much better than any other way that's ever been invented. And that's just all noise. It's ridiculously simple. You create a pool of capital by purchasing dividend-paying life insurance policies, ideally on everyone that you have an insurable interest in. Those policies begin accumulating cash value immediately, which is not money. Most advisors don't even know that. The insurance company gives you a contractually guaranteed loan provision that permits you to borrow against that accumulation without interrupting it. So if I've got $500,000 in cash value sitting inside of these insurance policies and an opportunity of high caliber tracks me down, a real estate investment opportunity, a business investment opportunity, an opportunity in general, I can pounce on that very quickly because the insurance company guarantees that I have access to capital on demand on my terms. Anytime I request a policy loan from the life insurance company, it's an unstructured loan. That means there's no repayment schedule. But my pool of capital in this example, $500,000, continues growing daily, uninterrupted by the policy loan balance. I pay no tax on the buildup. I can contribute almost unlimited sums. I have ready access capital on demand on my terms. I pay no tax on the death benefit proceeds. Logically, how much of my capital do I not want residing there? And I co-own the life insurance company. The moment you become a policy owner, you co-own the life insurance company. So you participate in a divisible surplus that's generated in the form of annual dividends. And when those annual dividends are declared, they cannot be repossessed, they can't lose value, and they're contractually guaranteed to be paid. So if the two of us, the three of us, gosh, maybe it's my first day with a new brain. I'm just trying to get used to it. If the three of us were to go through an exercise, well, we'll just do this real time. You guys can attest that we did not do this before the show. If we're speaking in integrity, we did not do this before the show.
Yeah, we've done nothing that I can imagine you're going to do now.
I want you guys to think of if you were to create the perfect investment, but the only caveat is that it can have no drawbacks whatsoever. That's the only caveat. And you get to create it. What attributes would that best investment have? So I'll get your thinking started by just planting a seed around some of the most frequent responses that I've gotten. Guarantees, access, no tax. So if you're thinking along those lines, what other attributes would that perfect investment need to have?
Long term.
Okay, long term. Thank you.
You said easy access.
Okay.
Ability to transfer and do business quickly and efficiently.
Got it. Okay, so ability to transfer, do business quickly and efficiently. What else?
Be able to leave it to your children or your estate.
Okay. Leave it to your children or your estate.
That it would have ideally a cash flow component to it.
Okay. Now we're getting to some of those investment type attributes, right? So cash flow, really good. What else?
Low tax to no tax.
Low tax to no tax, something that's pretty important to, I would probably wager all of your listeners too.
Mm-hmm.
What else?
Be able to leverage it.
Okay, leverage. Thank you. That's
There
an
you go.
important attribute. So the point that I'm getting at is that neither one of you mentioned anything that dividend paying life insurance contracts don't possess in the way of attributes. Because the reason I'm sharing this is that when people look at this conceptually, the brain goes into a either or mode. Should I put money into dividend paying life insurance contracts, or should I invest in that real estate project? Should I put my money into these contracts, or should I put my money into insert whatever product, mutual funds, stock, you name it? It's not an either or. It's an as well as. Because you can't get a better rate of return doing anything if you ignore who's controlling the banking function as it relates to that thing you're doing. And the banking function means the financing function. Matt, when I moved out west in April of 2008, you could still get 40-year amortization schedules on your mortgage.
Wow.
My wife, Rebecca, and I purchased our principal residence. We got a 40-year amortization on that. We thought, man, this is wonderful. I was introduced to this concept in July of that same year. We got rid of the conventional bank 7 years later, 33 years ahead of schedule.
Wow.
That's controlling the banking function as it relates to your needs.
Yeah.
Yes.
So go ahead.
Isn't that good?
It's amazing. And like everybody listening, where's the catch? That's what everybody's asking, or at least some people. And
Yeah.
I don't even think there is a catch. It's a win-win all the way around. But what are people's, like, what is your question for people who might have ideas about where the hook is or what could go wrong with this system?
I just let them know, happy hunting.
Yeah, I love that.
Yeah, happy hunting. I mean, if you can identify a drawback to this process outside of the human condition, meaning if you can imagine if you're borrowing capital from the life insurance company and you're never repaying it, that's not a function of the concept not working or the tool not working.
Yeah.
That's the human condition. And my late mentor, God rest his soul, he's right next to me every single meeting and podcast interview that I'm blessed to do. He always shared that if you put the best tool for the job in the hands of an incompetent, not only is that incompetent not going to turn out any good work with the tool, they're going to break the damn tool.
Yeah.
And so the drawback would be the human condition. The
Right.
tool, the insurance contract, has no drawbacks.
Yeah.
The process, the concept of becoming your own banker, take all the time you need to identify the disadvantages of doing that.
Yeah.
Because whatever you're doing in your life right now, the way that you're earning income, what you're doing is I can tell you, you're probably doing okay, but the banker's making a great living off of that income.
Yeah. And if the money's going to be gone, it's going to be gone from your own bank account anyway. So it's the same end result. So let's go through a process.
Sure.
So let's say I have $100,000, and what would I do with it according to your process?
Well, right now, nothing. The first thing that you would need to do is you would have to read that book titled Becoming Your Own Banker.
Okay.
And because just speaking for myself personally, and obviously for my teammates who, shout out to my Ascendant teammates, they're all incredible, wonderful people. They won't work with you if you haven't read the book.
Cool.
And so, because people lead with exactly what you just said, we get contacted all the time. Hey, listen, I got a couple $100,000 that I want to get going on this thing. What's my next step?
Yeah.
And my first question is, can you just take a moment and describe to me the problem as it was outlined in the book titled Becoming Your Own Banker? And just describe it in your own words.
Yeah.
And the person goes, what are you talking about?
Yeah.
I just watched a bunch of reels on the TikTokers. I'm ready to plow a bunch of money into this thing. Well, that's wonderful. We're not going to be well suited to work with you. You've got to read the book and you've got to have clarity on the problem so that the solution actually matters to you. Here's what I mean by that. If all I did was say to you, take that money, put it into dividend paying life insurance contracts, kick up your feet, watch the cash value grow daily, uninterrupted by any real estate cycle, political turmoil, tax event, nothing, stock market crash, nothing's going to interrupt the daily growth of that cash value. And you get to be the banker as it relates to your needs. All that you're going to remember is what you purchased from me, not why you're doing this. And so that is what sets us apart in this amazing business, is that we really coach our clients. We help them by actually helping them think about their thinking, not mine. And
Yeah,
that has the biggest impact.
Yep, it does.
Isn't that good?
It's amazing. So are you able to share and at least summarize the big problem, or do you want everybody to just go read the book?
No, it's ridiculously simple. We covered some ground on it. Anybody listening, if they were to just ask themselves 2 questions. One, is it not true that at present, all of your money is flowing through the books of someone else's bank?
No.
Is that not true? The second question is, if you realize that you're the one doing all the work and everyone else is getting all your money, would you identify that as a problem? Because if that's not a problem to you, if you're like, no, I'm completely cool with that. Like, that's just the way it's always been. That's the way it'll always be. That's not a problem to me. Well, then this solution won't matter to you.
Right.
And that's where the internet's, all this sensationalizing of the message that's going on, get rich buying your cars, get rich buying your insert whatever here by being your own bank, be the bank, beat up the bank, scissor kick the bank, like whatever these clever marketing, terms and things that are being utilized out there. None of that stuff matters if the recipient of the message doesn't understand the problem.
Yeah.
You earn an income. You're taxed on it. You systematically transfer all that income away from you. You pay the grocery store, the gas bar, your utilities, the mortgage, the car payment, the fuel, the food, the list goes on and on. That is a systematic and permanent transfer of money away from you.
Yeah.
And then the financial geniuses out there say, if you have anything left over, transfer it to Wall Street or Bay Street so they can go and invest it for you.
Yeah.
So we want you to keep transferring all your damn money away from you into the hands of someone else who thinks they can do better with it than you can.
Yep.
Whereas a peaceful, stress-free way of life financially is when you've got an ever-increasing pool of capital. You can take advantage of high-caliber opportunities. You can control how you finance all the things that you need throughout your lifetime.
Yeah.
You can recapture the interest that you're paying to banks and to finance companies. And you've got money flowing into your hands, not through. You're not changing the financial objectives that you have. You're just changing the process that you execute to make them achievable realities.
Yep.
And to do that, you need a good coach. You need somebody who can mentor you. And you want to work with somebody who knows what the hell they're doing.
Yeah. So I got a couple of questions coming to mind just to get clarity. So I get the why. I dead bankers, or if you want to rob a bank, own one, and all wars are banker wars. I'm decently versed in the whole banking system and how it is a fundamental element in humanity's enslavement.
Yeah.
Right. And it's all goes up to one computer named Aladdin at the top of the ship. But anyway, so now I say, okay, I bought this insurance. Can I call it an insurance policy?
Yeah. It's ideally a system of policies, but yes.
Okay. Yeah. I bought this. I am now engaged in this system. I am my own banker. I have this policy. I put $100,000 into this. I want to use $50,000 to buy a greenhouse or something.
Yeah.
I then structure my own structure of debt repayment of that $50,000, or is it structured in the minutes of the entity? How does that go?
Yeah, it's a really good question. So whenever you borrow capital, like the example that you shared, in this case, 50,000, the insurance company is not going to dictate to you how to repay that policy loan. And the reason is that the insurance company itself is guaranteeing the collateral for the loan. So they don't need a repayment schedule. You've got 100,000 in cash value that is still going to continue growing, much like whatever you're growing in the greenhouse. The lien for the loan is not on the greenhouse. It's on the death benefit of the insurance policy. So you have a life insurance company that you co-own. So you co-own a lender.
Yeah.
You have ready access capital. The loan is unstructured, meaning you establish the repayment schedule.
Yeah. Okay, I got a question. This is my
Hold on,
brain works
hold
this
on.
way.
Hold on.
Okay, go ahead.
The insurance company places a lien on the death benefit of the insurance policy.
Yeah.
The loan is private, meaning it's not reported to TransUnion. It's not reported to Equifax. So it doesn't interrupt your collateral capacity to go and borrow money from someone else's bank if that's what you needed to do. Every single day that you're growing something in that greenhouse, 100% of your money pool, the 100,000 in cash value, continues rising every day, uninterrupted.
So wait a minute. It sounds like you could even create derivatives off of this 100,000, because you just said, I believe you just said you can even go to other banks and use this to borrow money from other banks. Did you say?
No. So remember, when banks look at your credit risk,
yeah,
they determine one of many metrics that they use is your debt servicing ratio.
Yeah.
And so if you've got a $50,000 loan showing up on your credit report,
yes,
which in this case, it doesn't show up on your credit report.
Gotcha.
It's a private loan.
Yep.
So if you needed more capital than your system could provide to you, and you had to go to someone else's bank, they're not going to see that existing policy loan anywhere. It's a private loan arrangement. But what they will see is the cash value of the insurance policy. That's an asset.
So is it an asset that you could use for to borrow against?
Well, that's precisely what you're doing. And the lender is the insurance company.
Right. But my question is, could I go to another bank and say, hey, I've got this $100,000 cash value system over here. Can I borrow 20,000 and put this up as collateral?
You sure could.
So that's where the derivatives question came in, because if I could do that at US Bank, I still got so I could actually, well, no, because then they would record the 20,000. Okay, I'm catching up to myself.
Well, but here's the most important aspect of your question, because it's a really good question. So to use this analogy, so if you and I owned a Publix grocery store together, would we ever buy our food from Walmart?
Not logically, no.
So that would be not only illogical, but it would be a polite description of theft from our own business.
There you go. Yeah.
Right. So we want the energy, the financial energy, in this case, money. We want that flowing into our cash register, not somebody else's, regardless of the price.
Yeah.
Right. Whereas if somebody said, well, no, hey, wait a second, like Walmart sells milk and eggs and butter for a cheaper price than Publix. Yeah, I get that. This is not a function of price. This is a function of where the money's flowing to and who it's being put to work for. And if we co-own that Publix grocery store, then I would expect that as owners, we want to maximize the enterprise value. We want to maximize the net income, the profitability. And one surefire way to do that is to buy our own damn groceries there.
Yeah.
It's the very same thing when you become the banker as it relates to your needs.
Gotcha.
I'm not going to go do business with Wells Fargo or Royal Bank of Canada when I have access from a lender that I co-own. It would be
so. Then the next, I totally get that. That everybody does. So then the next question I have would be, what's the cost of the actual insurance policy? Percentage? Is it a percentage? Is it a fixed cost? How does that?
That's a really good question. So the amount of premium that a policy owner decides to pay is entirely their own decision. So we're not talking about determining the cost of the death benefit, where if you sit down with somebody and you have a typical life insurance conversation, the question is, how much is it going to cost me to get $1 million of death benefit or whatever amount that you want to purchase? That's not the nature of this conversation. The conversation is, how much capital do you want to begin redirecting into a system that you own and control? And if the person says, well, look, based on my current financial, the way I'm put together financially, I'm earning $100,000 a year, which you're not really doing. You're just handling it. I'm already setting aside $20,000+ that I'm putting into a 401k, or I'm putting into a Roth IRA, or I'm putting into an RSP up in Canada.
Yeah.
Well, we're not going to change that person's cash flow. We're just going to change where it's flowing to. Right. And so in that case, the person might say, you know what, I want to start with paying $20,000 in premium a year. Great. That's a wonderful starting point. Some folks, we have clients who put in as little as $100 a month because they purchase policies for juveniles, for their children, for their grandchildren, for their great-grandchildren. We have clients that put in more than 6 figures a month. And so I always express to anybody watching or listening, if you're somewhere in between 6 figures a month and $100 a month, we can help you.
Yeah.
And if you want to be my best client, I'll let you know exactly what that premium amount is too, if you want to beat them. That's more than 7 figures a year. But
nice.
It's
Okay.
in all these years, like 17 years now practicing this process, I don't know if you guys would believe this or not, but not one policy owner has ever called me to say that they were pissed off that their cash values kept going up every day.
Yeah.
Isn't that good?
It's amazing. Now, when you say cash values, the thing gains interest because, like, tell me how that works. How does the cash value go up every day? From us putting more money in, or is there an interest-bearing account type of situation?
The reason it rises every day is that the insurance company is guaranteeing that the cash value and the death benefit will be the same, so they must match by age 100 of the life insured in Canada and age 121 of the life insured in America. So if you have a policy where you have a death benefit that's ever increasing, which the way that we structure the policies, the death benefit continues rising, the premium stays the same, but the death benefit continues going up, and you continue aging every day, what must the cash value do?
I got you.
It has to grow. And it's not I hope and pray that happens, or let's see how it works out this time compared to everything else I've done financially in my life. These policies are not investments. They are unilateral binding contracts. The insurance company is the only party to that contract that is required to make and fulfill legally binding promises. The policy owner's sole responsibility is to pay the premium. That's it.
Wow. It sounds like
I dropped the mic, but it's a pretty expensive mic. I'm not going to drop this mic. I'm just teasing. I'm just teasing. It's it's one of the things that I feel so much fulfillment is being able to talk about this day in and day out. I never get tired of it. Never will.
Matthew, any questions?
Yeah. Hey man, I love it. Nothing better than becoming your own banker. Now I got to get my head out of my ass and start doing this myself. And the power of it is just mind-blowing. When I saw you, I believe it was last December, speaking, and you were going through some of your own numbers. I think you had somewhere in the neighborhood of 70 to 80 policies.
That's right.
Different family members.
That's
and just taking care of everybody.
That's right.
And doing it in such a way where it empowered them, protected them, gave them remarkable value.
Yeah.
But you were the one able to teach them and then also control it, if I understood that correctly.
That's absolutely correct.
Can you go into some of those details on how you're able to make all this work and why it's so valuable for families and on and on?
Of course. Where it all begins is, most people who are first exposed to this concept, they really get excited around the possibilities at the individual level. So, how can this work for me? And how can this be impactful for me? And what we do is we extend that to the family. So we want to have discussions around, look, if all of your money's flowing through the books of someone else's bank, can you identify any family member where that's not happening? And when the family can shop at home, so what we've done is we've built our system of policies. We have 78 policies in our family banking system now, 21 lives insured, and our family shops at home financially, meaning when a family member needs a vehicle, they're coming to the family banking system to arrange a loan from the family's money pool to go buy that vehicle. So now all that stream of payments, that money that would have otherwise been permanently transferred away from the family forever, is now flowing back onto the books of the family's banking system. So it can be redeployed, it can be reused, it can be reaccessed without interrupting any of that daily growth that's happening on all of those 78 policies. We have more than $80,000 a month that comes back to the family's money pool as loan repayments. The family's well aware you get to reaccess everything that you repay, plus more. So whenever you need cars, if you need home renos, if you need appliance upgrades, if you need anything that the three of us can think of, I want you to shop. I want you to shop at home.
A family bank.
Yeah.
That's incredible.
We just released, and you'll see a lot of great articles coming out about this in USA Today, Wall Street Journal, LA Times, CEO Weekly, all of these publications that have got articles spun up about the release of this book. Don't spread the wealth. You've all heard the expression before. Oh, spread the wealth, man. Spread the wealth. Yeah. I'm saying don't do that. Yeah. Keep it in the family.
That's amazing.
That's where it belongs. It doesn't belong in some government balloon head's budget. It doesn't belong on the books of someone else's bank. The money belongs in the family. That's where it should be kept. And so this book is, I would absolutely encourage anyone to read it. I happen to know the authors pretty well. They're super nice guys. They're really intelligent. Yeah. I got to tell you guys this real quick. So $80,000 coming back every month.
Yeah.
The premiums I pay now have gone up this year. The premiums are $1,350,000 some odd a year. And here's the deal. When you think about just our whole family that participates in this process, we're not only describing all of the living benefits, but we can all agree death will come. And when that day comes, with all of these lives insured in the family, there's going to be a tax-free windfall that shows up exactly when it's needed the most.
Yeah.
And that is important. And so what we did, you guys may not know, our podcast in Canada was named Wealth Without Bay Street. So a bunch of Americans were reaching out to us continually going, we have no clue what Bay Street is, but we like your content and can you help us out? So we just rebranded over to Wealth on Main Street. Isn't that good?
Yes, perfect.
And so keeping things ridiculously simple. Get your hands on this book. If you had to choose between this one or the one that Richard and I co-authored, buy this one first all day long. It's a 92-page read. It'll take you less than an afternoon to get through it. But if you read it with an open mind, it's going to open your eyes to a whole new financial world. I can promise you that.
Wow.
And try not to overthink it. Yeah. It's money has to flow in order for any transaction to take place. And so why not have that reservoir be your own, one that you own and that you control? It just makes perfect sense once you understand the problem.
Yep.
But until you understand the problem, the solution just won't matter to you.
So there's one question that might be a little not completely clear in my mind. I think it is, but I'm still going to ask.
Yeah,
so
sure.
When you say the premium could go from $100,000 or $100 a month to really whatever, right? Your annual premiums are more than $100,000 or like over $100,000 a month, correct?
My annual premiums are 1.35 million.
Okay. Okay. Yeah. So that money is that's the expense, right? That's money's gone. That's the cost to have the system, correct?
No. So once you understand how these policies are engineered, which is, obviously more of a personalized conversation dependent upon what you want to put in to a policy. The policies are designed so that the cash value growth is going to far exceed the premium that you pay. So, for example, if I bring it down to maybe a more, I guess, manageable level for most folks. So I just renewed a policy here that was put into place in 2012. The annual premium's $20,000 a year.
Yep.
And that policy's cash value grew by $32,000 this year.
So it cost 20 and it grew by 32.
Yeah. So I put 20,000 of premium into the policy.
Yeah.
And what happened to my death benefit?
It went up by 32.
No, went up by a lot more than that. So the death benefit rose substantially.
Yeah.
A dividend was declared and paid, and the dividend was just over $9,700. That dividend purchased more death benefit in the policy. I'm a lot older today than I was a year ago. And I paid $20,000 in premium, and just isolating 1 year of cash value growth, it was $32,000. So when somebody asks me, how does this hold up against inflation? I said, well, let me take you back to economics 101. If I put $1 somewhere and I can immediately reaccess far more than $1, how am I doing in addressing inflation? Because my premiums can never go up. So if my cash value went up $32K in that policy this year, what is the annual increase going to be when I pay $20,000 in premium 10 years from now? It's going to be 3 times that amount. But this is all predicated upon making sure that you're working with somebody who knows what the hell they're doing.
Right.
And that would be ideally an authorized infinite banking practitioner with the Nelson Nash Institute. And when you meet with somebody who's indicated that they're authorized, ask them to show you a minimum sample size of 100 client reviews, not one, 100.
So, gotcha. Another question then. Where is the origin of the money that pays the death benefits? When there is so much extraction, how is this sustainable at its core?
Well, it's been in existence in Canada for the past 178 years, and in the US, just north of the last 200 years. And in each and every one of those years, the insurance company is collecting premium from all the policy owners that are paying premium, and they're collecting more than what they need to satisfy the contractual obligation to pay the death claim. So I'll give you an example. Have you ever heard of term life insurance?
Yeah.
Mm-hmm.
You've heard of that before?
Mm-hmm.
Less than 2% of term life insurance policies ever pay a death benefit. So the insurance company has millions of policyholders paying premium, and less than 2% of those contracts will ever pay a death benefit. So the insurance company has to deploy that capital. They can't let money sit still. I was sharing just in another podcast interview that I was doing, money's a lot like shit. If you just let it sit still in a pile, it's going to stink. But if you spread it around, it's going to grow stuff. Yeah. So the insurance company doesn't let it sit still. They can't. The point being, I'm going to get technical real quick. Is that okay, guys?
Yeah.
So the insurance company is required to maintain what's called a minimum continuing capital surplus reserve just to operate as a life insurance company. So for every $1 of contractually obligated payment of death benefit, the insurance company must have a minimum of $1 that's readily accessible in surplus. I'm not talking about the overall general fund of the company. And the carriers that we work with, they're operating at about a 1.5 to 1.7 ratio. So for every $1 of contractually obligated payment of death benefit, they have ready access to more than $1.70. Contrast that when you know the truth that all of your money is flowing through the books of someone else's bank. The banks inflate the money supply. The insurance carriers cannot do that. That's why if you were to look back across one century, take your pick, the financial crisis, COVID, H1N1, the tech bubble bursting, the savings and loan crisis, the Great Depression, the Spanish flu, the list goes on and on and on. Not one life insurance company has failed.
Wow.
So if you know the truth and you understand what's happening, you'll know exactly what to do. I never have high net worth affluent people sit down with me and say, can you help me grow my wealth through 401ks, please? They're asking, where can I warehouse capital so that A, I don't lose it, and B, I've got ready access money on demand to take advantage of high caliber opportunities to grow my wealth.
Yeah.
What better place is there than to have your money reside? Where I've
there's only one better place, and I'll show you. It's in a food forest, right? So we call it composting the fiat, right? Which fiat, like you implied, is
that's
shit.
Where the money got sprinkled.
Yeah. So we put the money into creating our own off-grid regenerative landscape, and the return on that is absolutely exponential. And on every conceivable level. But what you're talking about is incredibly interesting as well. And I'm looking forward to chatting with you here next week and seeing about going next steps on this.
Oh man, look at it from this vantage point. You don't have to play their game anymore. This is not a creature of the tax code. This was not invented by the IRS or by the Canada Revenue Service. What an absolute dumb name for a bureaucratic organization like that. Canada Revenue Service. Give me a break. So this is not a creature of the tax code. You do not have to play their game. And you don't have to give up your money and hand control of it over to Wall Street or Bay Street anymore. If that's what suffice to say, if that's what you choose to do, if somebody says, look, Jayson, I love the notion of becoming my own banker. I want to do that, but I want to invest my money in Apple and all these other great companies. It's like, great. I don't want to interfere with your objectives, but I can tell you one thing. I know what your cash values are going to be doing every day. I don't know what the stock market's going to be doing every day. And I would much prefer to be on an elevator going straight up than a roller coaster flopping me around all over the damn place.
Yeah.
So I'm not suggesting that people do one thing or the other. I just want to be abundantly clear about that. It's as well as.
Yeah. Awesome.
Isn't that good?
It is very good. Who is the kind of in your industry or in the insurance industry that you're referring to here?
Yes.
Where's the top of the food chain? Where's the regulator? Is it BlackRock? Like, where's the top of the food chain? Who makes the rules on this?
Oh, it's a really good question. So the carriers that we work with are mutual. So there's no stockholders. The dividend paying whole life policy holders own the company. The company has a board of directors, a leadership team, a management team, employees. They run an operation. The insurance company, when you're dealing with a mutual company, no stockholders, they can only be responsive to the owners of the business, which are the participating policyholders. There's no stockholders to be responsive to.
It sounds a little bit like a trust in its function.
Yeah, actually, that's a great way of thinking about it, because when you set up a trust, there, as you know, there are certain components to that. You have the trustee, you have the beneficiary, right? So yeah, when you think about it that way, that's actually a good way of referencing it.
Cool.
It's common people contracting together with one another to solve a common problem.
Yeah.
That's what it is.
That's freaking epic. Oh man, I'm really, really excited about this, Jayson. Well, thank you, man. Thank you for sharing this information. Matthew,
you're welcome.
Any last words or thoughts?
I would just say, for folks watching, listening, I always love to hear from folks, and it's me that you're hearing from. So when I respond to comments or people reaching out to me, it's me. It's not someone else doing that for me. I truly love to hear what's on people's minds and to hear what clarifying questions come up or insights that they have after they've read the book, and to make sure they get connected with the right person on my team in Canada and the US.
Can you just go through the name of the book again? We've had some people ask that.
Yeah, absolutely.
Show that one up there.
So the book is titled Becoming Your Own Banker. And if you head on over to, Matt had the URL up there, ascendantfinancial.ca/shop, ascendantfinancial.ca/shop. We'll courier a copy of the book to you. We don't mail them, we courier them. And then the second book, which was co-authored by yours truly and my amazing podcast co-host and Wealth on Main Street partner, Richard Canfield. This book titled Don't Spread the Wealth is on fire. Like, it is selling like hotcakes. And there's a reason for it. And the feedback that people are giving us is that it speaks to the family. They feel like we're talking to them when they read it. So it's really, really well done. And you can just head on over to Amazon.com. Just have Amazon get a drone and drop it on your roof in the next 2 hours. Like, and there's a ton of bonuses with this too. We give like family banking meeting outlines and video-based resources, all on the house at no cost. And so get your hands on a copy of this. You'll be glad you did.
Is that on Amazon.ca as well?
It sure is. Yeah. Yeah. It's available wherever books are sold. So if you shop at Barnes and Noble, if you shop at like wherever books are sold, you'll be able to get your hands on this book.
Yeah, it's a bestseller right up there at the top. I put in "don't" and "spread your wealth" showed up.
Cool.
Wow.
Yeah.
Congratulations, brother. That's beautiful.
Yeah. Credit to just being the sum parts of everyone who's mentored me.
Yeah. Well, I would like to invite you to explore the idea of taking your yard and turning it into a true foundation, a fountain of wealth and abundance, right? That's what we do. We put food forests, edible, regenerative landscapes that are less maintenance than a lawn and produce all the food your family needs. It's really epic.
I love that.
Yeah.
So Jayson, now you're 17 years deep in this.
Yep.
Where's it going next for you?
Oh man, I love when I get asked that question. So we're ramping, as you know, Matt, we talked before the show, like we're ramping rapidly in the United States. And so the business here in Canada is going to be much bigger than 10 times what it is today by December of 2033. But in the United States, that business is going to be 100x. We're going to build a $1 billion business that is going to serve the people by actually serving them. Like, we help our clients by actually helping them. And so where this is going is we're going to be doing a lot more events that are regional based, that are really showcasing clients, their experiences with the process, so that people who are, much like the both of you, who have curiosity and questions, and you can actually engage and interact, not just with the experts, but with people who are doing it every day. And so we're going to be placing a big, shiny, bright light on clients, doing a lot of regional based events. Stay tuned. We're going to be announcing details early next year for the biggest infinite banking conference in North America. It's going to be bigger than anybody's ever done. And we're going to have people from across North America in attendance. It's going to be absolutely phenomenal.
That's awesome.
I want to be there.
You're more than welcome.
Yeah, great. And I guess last question for me is this stuff that can be carried in trusts and in like private member associations and that kind of stuff? Are you able to move it into more of the private world and protect it so it's
great question
down and all of that?
Yes, the short answer is yes. And there are just a wide variety of trusts and applicability, and in many cases non-applicability. And so that's why it's really important, again, to speak to someone who knows what they're doing and can evaluate what is the best way. If the objective is to maintain as much confidentiality and privacy as possible, then there's a variety of ways to do that. And it's like the one thing that I do have to say that I'm reminded of often is that Nelson always said that this is an exercise in a person's imagination as well, because the more that you see the infinite banking concept, the more that you'll see you didn't see.
Mm.
And I'm still learning. When I first got going in my journey, I established wonderful relationships with folks who had already been practicing the process for almost a decade in their lives. So you can imagine where they are in their journey. And I'm still learning from them and growing, because there's no such thing as having arrived in knowledge. There's always something new to learn. And as it relates to infinite banking, there's no destination or landing spot. The possibilities just keep opening up. And the more capital you put into your system, the more capital you have access to. And it's just a peaceful, stress-free way of life when you get the bankers out of your life.
I love it.
Oh man.
Love it.
Absolutely.
Cool.
So to wrap this up, Jayson,
Yep.
What should the people watching here do now to take immediate action? What is the thing that Ascendant Financial can help them with today that will get them started on their infinite banking journey?
Well, get your hands on a copy of our Nelson Nash's book. I promise you'll be glad you did. Shameless plug for our book. You might want to just bundle it, get them both. But head on over to the YouTubes and go to Banker's Vault. Banker's Vault. There's 900 plus videos. We post so much content to that channel, Banker's Vault. So ease on over there.
I'll pull that up for everybody here in a second.
And just consume till your heart's content. And we love YouTube for that purpose, because that's where people go to learn. They go to YouTube to learn. And so if you want to learn more about this process, no better place than to head on over to our YouTube channel and enjoy. We recorded all that content especially for you.
Awesome. Thank you, my friend. Very, very good information. A lot of things are going on in my mind with regard to the things we're doing and how we integrate these ideas and these strategies.
Yeah, Jim, as we're sitting here talking, there's something there with the Shared Earth Foundation.
Yeah.
And Jayson.
I feel it. I've been thinking it for a half an hour now. Yeah.
All right, guys. Well, it was an honor.
We'll be reaching out to talk to you some more, Jayson. We have some ideas that might be appealing to you, because I know your intention on making a positive impact is massive, and we're completely in the exact same alignment there. So we have some other ideas we'd love to share with you.
Sounds great. Can't wait to hear them.
Ciao, guys. Thank you.
Thanks, guys.
Thanks, everybody, for tuning in today. Have an amazing day. And we'll see you
ya.
soon in another episode of Seeds of Abundance.
Ew.